Day 3, ladies and gents. Let's get it. I've just finished my workout at the gym, and now I'm recording this third part of the free YouTube bootcamp for you, which is gonna be about candlesticks. So you will see I'm trying to record for you this entire series every single day. And for me, time is the most important thing. And not only in trading, you will see how important time is going to be for trading, but also in general for your daily routine and to actually build successful habits, to run an entrepreneurship, to have a good company at the end that you're running, and also to be successful everywhere in life, right? Like time management is one of the most important things, and it will be reflected in your trading as well, because most people will lack in reality to find time for trading, to find time to watch this video. We're right now only on part 3 and the views are already dropping. Most people don't even find the time to watch that. And it's basically just a couple of minutes per day now that you have to take action for yourself. That's what we talked about in the first video as well. So guys, what are we gonna do today regarding candlesticks? How do we view them? How do they work? I will go right now to the charts, guys, to show you specifically what I mean. But candlesticks are going to be the foundation for everything in reality. It's something that comes from Japan as far as I know, so we will dive into Google it a little bit to show you something, because it was very interesting for me to see that. But they basically use that to price in the price of rice. That was very interesting. That was a method because you can basically see what price the price was at the open of a specific time frame that you choose. It can be the daily, can be the 4 hour, the weekly, monthly, whatever you choose. And you will see that actually throughout the time period where the price will provide you a high, a low, and then also when it comes to the end of this time frame of this period, what price is going to be. And this information is going to be crucial for us traders. So without further ado, guys, we're going to go right now into the charts. Let's go. So guys, we are at the charts. Let's break down candlesticks. So I have here Wikipedia for you guys to show you the real definition of it, so I'm not mistaken with something, and then afterwards I'm going to explain you my words, specifically how I'm going to use it and how we're going to use it in the financial markets to understand how we can trade with it. So a candlestick chart here, per definition, also called Japanese candlestick chart or K-line. Never heard about that before. Is a style of financial chart used to describe price movements of a security and currency. So yeah, makes sense. While similar in appearance to a bar chart, that's interesting because we have more variations, right? Like there is not only the candlesticks, they also have like Heiki and Ashi. I've used that in the past. A more easier way to understand if we're in an uptrend, downtrend, because you just follow the colors, while on a Japanese candlesticks you will have multiple colors sometimes. Right after, like, it starts with green, then red, then again green, red, and then you don't have a clean trend. While on a Heiki and Ashi chart, it would be, well, it would remain the entire time bullish and then only bearish when it's really gonna go down. Yeah, it has all advantages and disadvantages. Of course, we use candlesticks only because they are very powerful in terms of the data that they provide, while the others won't provide it to you that way. So that was just an interesting thing here, because I've seen, yeah, bar chart, that's also something that exists. I've never used them. I've only seen them in the past when I started out in trading, and there are even more, and we will see that on TradingView then, more detailed. So each candlestick represents 4 important pieces of information for that day. That's important. It's not only valid for that day, it's also valid, of course, per hour, per minute, whatever time frame you choose. Open and close in the thick body, high and low in the candle wick. So here we see exactly what they mean. This is the candlestick, right? Here you see actually the open. So that means when the open is at the top and the close is down below, that means it's a bearish candle. The wick up and a wick down below. This is the maximum and the minimum, so the high and the low that it achieved within this specific time frame that you choose, right? Like this candle here can represent 1 day of price action, but it also can represent 1 second of price action, right? And here is when it opens, and then it can trade down, can trade up. Here is the high, then it's trading lower, and then it creates the low, comes maybe back up, and then it closes. And that's exactly where the price ended up after 24 hours, for instance, right? If it's a daily price action candle here, or after 60 seconds, if it was 1 minute, or specifically after 1 minute. All right. So, and that is important, right? Like this data is exactly what we need as a trader, because that will help us to understand certain things. And I think here it's already like explained quite interesting, because being densely packed with information, it tends to represent trading patterns over short periods of time, often a few days or a few trading sessions. That's completely right. Eventually, you can even use this for swing trading, but especially for swing trading when it comes right now to like understand what it's going to do throughout the next couple of days or weeks or even months, or let's say even years, it's not going to be that strong, because you need more data, right? Like you don't only need the candlestick chart, you would also like need the fundamental analysis, and that's something that's not included in that, while it's printing that data as well, because price is moving sometimes very much to the upside based on news, or it's going to like create a trend based on some events, such as Trump made a new decision regarding the policy, whatever, or this one thing right now that they are doing with China and so on, or any war that are going on and so on. That's exactly what will be priced in, and it will be visible throughout the candlesticks as well. But you need to understand the information, because you watch the candlesticks, you will only understand this data that we just went through. Like it's not going to provide you more data than that, and it's not going to tell you, hey, Trump did at that day a tweet about whatever, or the war started at that day. That's not going to be visible on the trading view chart. That's basically your job as a trader to add to it and to understand that, okay, that's why it's eventually right now in a bull trend. All right, so candlestick charts are most often used in technical analysis of equity and currency price patterns. They're used by traders to determine possibly price movement based on past patterns, and who use the opening price, closing price, high and low at that time period. They're visually similar to box plots, though box plots show different information. All right, so I think that's already very interesting. I think it's really summing up what you need, so you don't even need a course. No, but it's interesting because that's really exactly what it is, and it's very interesting that it's also stated here in Wikipedia. I just do it right now for you guys. Never done that before to like really watch what Wikipedia says about trading itself. But it's interesting to see that the information provided here is very accurate, to be honest. So yeah, here just quickly regarding the history, candlestick charts are though to have been developed in the 8th century by Munehisa Homa, a Japanese rice trader. That's exactly what I mentioned at the beginning of the video. They were introduced to the Western world by Steve Nissen. I think more people know him. I don't know him. I've heard about Steve Nissen already. In his book, Japanese Candlestick Charting Techniques, first published in 1991, they are often used today in stock analysis along with other analytic tools such as Fibonacci analysis. Exactly. Like we use it with a lot of things, to be honest. So yeah. Yeah, here you can see, for instance, a chart on the daily chart. Here you can see EURUSD daily chart. So each of these candlesticks represent 1 day. All right, here very cool. Here's even says MetaTrader 5. It's a platform we use as well to trade. But in terms of analysis, we're going to use this one, which is TradingView, guys. All right, so let me show you on the charts what candlesticks really are and how we're going to use them. So basically here, very beautiful. We are currently on gold on the daily time frame. So here is where you can choose from the time frames. Here is the instrument that you can choose from. In this case, it's gold. Here on my right side, I have an entire watch list with all of my favorite pairs, Forex pairs, futures, and also stocks, and also crypto. And whenever you choose one of these pairs, right, you will have different price levels, right? Like here, gold is at a very high price, for instance. If you compare this now, for instance, to another asset, right? Like your Euro USD will always bounce up and down in a similar range because it's a pair, euro versus the dollar, while gold is, for instance, moving the entire time higher due to inflation, right? So we are currently here on the daily time frame, which means each of these candles that you can see here do represent an entire day of price action. So that means if we are right now here to look at a most recent price action, which was yesterday, price action was bearish, right? That means the price opened up exactly here. This is the opening, moved a little bit higher, and then it moved down lower, and then it had a closing here. And that means, hey, we had a bearish price action because we close, very important, we close below the opening price. That's exactly the huge difference between a bullish and a bearish candle. A bullish candle, right, opens, trades a little bit below, right? This is why you have the wick, because it's the low of the day, right? The low of the day. This is the opening of the day, and it's trading up higher, closing above the open, right? This is the opening price, and this is the closing price. And because that happens, the price is printing bullish. Let me show you how price continues. So exactly where you have like the closing, because you need to connect the dots now. The daily candle closes, the next candle opens up right now, and it's trading below, and then it's pushing higher. And now again, it's closing above the opening, so this entire candle is a bullish one. So if I show you now a simulation, so you can better understand what I mean. Now that the day closed, right, this is the opening price, the same area becomes, this is the closing price, the same area becomes the opening price for the new candle. So the new candle now opens, right, and is trading a little bit higher, but then it comes back below the opening price, creates a new low, right, which is this area here, and then it's rejecting this entire thing, and here is then the closing, which means the new candle right now will open exactly at the previous daily candle closing. Now you see, because price is now again closing below, so at the end of the day, it's lower than when it's been at the beginning of the day, we have a bearish candle, right? And that's exactly how it works. And that's the data we need. We don't only need specifically right now, hey, the opening and the closing. We just need that in terms of understanding if the day was bullish or bearish. Because what we can say is, if a day was bullish, we might have a chance that the price will continue to be bullish, right? But I will teach you that in another video, because this is not the topic for this one. But just for you to understand, because you need to know, hey, how was the previous day, right? Or how have been the previous days? While understanding that a candle, or you have a consecutive candles who are bullish, like in this case, you will then understand that this is a trend and so on. But basically, you need the information. You need the information to know if the price is bullish or bearish. That's basically it. All right. So if we now go to the current situation is, this is today's daily candle. You can see here the actual price where it is, and you see it's moving, right? Like this daily candle is changing in the moment right now when we're watching it. You also have like right now here a price, like this line, which shows you exactly where we are currently. And you also already see the opening price, because it's exactly where the previous candle closed. And you have right now here the time, which means in 5 hours and 30 minutes, and here 3, 2, 1 second, the daily candle will close, right? So that's the remaining time. You see that already here. And that is going to be visualized for each time frame that you choose. All right, and you will always know when it's going to close, right? As a reminder, very nice information to have, and you need that, right? And currently, it's a bullish candle. This doesn't mean it's going to remain a bullish candle. This can change. It can convert in a bearish candle. How will that be the case? Well, if the price is currently like trending up, it can now go down. And if it goes down, it's gonna eventually close. Then if it's gonna close in at the end below the opening price, we will have again a bearish candle, right? And then you see that this current move up right now is the wick, right? And the wick will be like will show you the exact part or the exact length the price has been above the opening and below the closing. All right. And now, very interesting, right? If we, for instance, for this purpose, let me just mark up now, because that's what you will need, is for instance to mark up the daily candle high and low. So here, the previous daily high and low. And now you can go to another time frame, like the 4-hour time frame, and you will see now a different story. This candle, right? If I just show you now just this candle to be a little bit more easy for you to follow. This is a daily candle, a bearish candle. A bearish daily candle will look on the 4 hours completely different. It's gonna consist of more candles, obviously, right? Like this is right now not completely correct. Let me just show you with the separator. So you see now, we talk about Monday's candle. This is today, Tuesday's candle. And I will just remove that like this. So you can now clearly see the 4 hour, which contributed to show you now in this case a daily price action, right? So this one looks like one candle on the daily. On the 4 hours, there are a little bit more, as you can see, right? Specifically, they will show you more information. That is the thing with multiple time frames, but we'll show you that as well in another video. This video should be just really focusing on candlesticks so you understand what we mean with candlestick, what candlesticks in reality are, and also here you can connect the same things as well. So you have here the closing price, we have now here the opening price, we close above the opening price, so we're bullish, right? Now we open, we close below the open, we have a bearish candle. We open, we close below the open with a bearish candle. We open, we close above the open with a bullish one, and so on, right? Like it's so simple. And the price is always like not just opening up and then just going to the closing price and then just remains like this. Otherwise, this is how a candle will look like. But they have wicks, right? They have those wicks up and down, basically because the price is creating highs and lows in that period that you choose here. It's always going to happen. You can also go to the 1 hour, right? And you see that on the 1 hour, you will have 24 candles in this case in a specific day. And you will have then even more data and you will see then more information. 15-minute or very popular, the 1 minute, right? So each minute something happens. Specifically when you go to the current price action where you are, this is exactly where you will then see the action. Here you will see throughout 1 minute exactly what happens. You see, price closed, opened up, it's already trading below. The candle right now looks bearish, right? Currently it looks very bearish. Very interesting to see and observe right now what's going to happen. Will it keep to drop now lower or will it now go back up? You see, it's holding the bearish pressure. It's really going lower right now, and that is in this case the M1 time frame in action. Here you see in 20 seconds, we will see if it's going to close bearish or not, and more than likely, if we have bearish candles, you can expect more bearish candles to come, or eventually that the bearish trend will continue. Right now, you see huge rejection. Right, you see, oh, okay, it's really coming back up. Eventually, even ending up closing bullish. We don't know. Okay, no, we really close bearish. Opening price, new candle opens, and is already pushing higher. You see, just a little bit, it has to move up higher, and it's already bullish. Now, very bullish momentum. And now, again, you see some rejection. Okay, back bullish, very interesting. This is the data you will need then, right? In this case, we're observing the 1 minute. You cannot even go lower, right? Like 5 seconds. So each 5 seconds will print a candle, or even the 1 second, which is very crazy to even watch. You will see here on the 1 second, the price is even gapping, right? What do I mean with gapping? Gapping means price actually is just open up the next candle much lower than the previous ones. So it's gonna create a gap. So the pressure was too big. It could not be visualized on the 1 second time frame in this case anymore, and price dropped. This can also be sometimes the case on very, very, very big time frames, such as the daily as well, or the 1 hour. You will visualize that specifically when something happened fundamentally. All right. But yeah, that's basically it, guys. So that's how you can connect a little bit the dots in terms of how candles look like, how they work, and so on. And in the next video, we will now try to understand how to use candlesticks, right? Like what concepts we can use for it, because that's basically the data we need all the time. These highs and lows, one more time, just for you to understand. This is the high, this is the low, this is the open, this is the closing. That's the information we need. That's the information we have, and we will do a lot of fun stuff with this. So stay tuned for the upcoming videos, guys, and stay tuned for this bootcamp. Have a nice one.